Hello everyone, welcome to Decode Investment Banking. My name is Joyeeta and today I'll be talking about the newly introduced Public Offer of Equity Securities Rules 2025 published by the Bangladesh Securities and Exchange Commission. So in this episode, I'll walk you through the key changes in the new rules and explain how they differ from the previous framework, what has changed, why it matters, and what it means for the issuers and investors of the capital market of Bangladesh. So let's get into it. Firstly, disclosure-based versus merit-based framework. So before the new rules, the IPO process was largely disclosure-based, allowing companies to proceed if risks were disclosed and basic requirements were met. Under the new 2025 IPO rules, this has shifted to a stronger merit-based approach with checks on eligibility, pricing, valuation, and the use of proceeds. So as a result, disclosure alone is no longer sufficient, and companies must also meet defined quality and financial benchmarks to enter the market. Second, pro rata versus lottery-based allocation. So previously, IPO share allocations were based on timestamping, giving faster bidders an advantage and raising fairness concerns. But under the 2025 IPO rules, this has been restructured. So eligible investors, mutual funds, permanent employees, and HNIs now receive pro rata allocation under both fixed price and book building methods, while general investors and NRBs receive through a lottery-based method. This removes speed-based advantages and improves fairness, transparency, and the balance in the allocation process. Third, exchange recommendation as a gating step for BSCC consent. So previously, the stock exchange had a limited role in the IPO approval, and the commission consent did not formally depend on the exchange recommendation. Under the 2025 rules, a positive recommendation from the stock exchange is now mandatory before BSCC approval. This means companies must first pass the exchange's review, making it an active checkpoint that strengthens scrutiny, disclosure quality, and investor confidence. Fourth, pre-IPO paid-up capital raised to Taka 30 crore. Earlier, paid-up capital requirements varied by the IPO method. So 15 crore for fixed price IPOs and 30 crore for book building IPOs. The 2025 rules remove this distinction, requiring all companies to have at least 30 crore in paid up capital before an IPO, regardless of the method. This sets a uniform and higher entry threshold, so smaller companies may need to strengthen or restructure their capital base or opt for an SME platform instead. 5. Book building method. Indicative price backed by at least 40 EI valuations. Previously, book building pricing relied mainly on the issue manager's valuation with no minimum requirement for institutional input. Under the new rules, the indicative price must be supported by at least 40 eligible investor valuations with balanced participation from portfolio managers, stock dealers, and asset managers. This shift pricing from being manager-driven to institutionally validated, making early investor engagement and roadshows a key part of the IPO process. 6. Lock-in for EIs. Earlier, eligible investors faced no lock-in period and could sell their shares immediately after listing. Under the new IPO 2025 rules, EIs in book building IPOs now have a staggered lock-in whereby 50% is locked in for 90 days, 25% for 120 days, and the rest 25% for 180 days. This aims to reduce immediate post-listing sell pressure, encourage long-term institutional commitment, and supports price stability. Finally, book building method institutional allocation strengthened. Earlier, book building IPOs relied mainly on retail participation with general investors holding most of the allocation. Now, the process is institutional-led. Eligible investors receive 40%, mutual funds play a larger role, and general investors' portion is now reduced to 35%. As a result, IPO success depends more on institutional conviction than retail oversubscription, supported by better pricing discipline and post-listing stability. So overall, the 2025 IPO rules represent a positive shift for Bangladesh's capital market. By raising eligibility standards, strengthening institutional participation, and improving fairness and transparency, the new framework encourages better pricing and more stable post-listing performance. So the focus is clearly moving away from short-term excitement towards a long-term value creation, building stronger confidence for both issuers and investors. That is it from my end. If you have any queries or for more information on IPO, please do contact us. Thank you for watching Decode Investment Banking. brought to you by UCB Investment Limited.